Do you believe in the super cycle?
If you ask the mining executives, they would say no. A super cycle is something we coined over a decade ago, and I think they're very careful not to go back there. I mean, that was all about greenfield capex, brownfield capex, and one of the things that I think the mining stocks have been very careful in this sort of pickup in prices is to make sure that cash comes back to shareholders, that they aren't seen to be, you know, blowing money on marginal return projects. And I think that's shown really in the share prices of the stocks, notwithstanding clearly the sell-off we've seen in the last couple of days, which I think is, you know, more around bond yields going up. I mean, you know, once money isn't free anymore, you know, commodities themselves, suddenly people, investors or speculators may question, you know, the appetite to carry on holding them. And I think we're seeing a bit of the, you know, excess blowing off. And, you know, when we last spoke, I think a month or so ago, we were talking about rhodium. You know, rhodium prices carried on going up to nearly $30,000. And, you know, speaking to the CEO of Johnson Matthey yesterday, who are one of the world's leading catalytic converter manufacturers, they said that manufacturers are now looking to thrift as much rhodium as possible because, you know, at $30,000, it just is starting to become fairly uneconomic for them to include that metal in their catalyst, or try to obviously, you know, put as little as they can into it. So, you know, I think that, you know, as your previous commentator said, I think some of the prices have got a little bit ahead of themselves. So we're seeing a bit of a reset happening.
Yeah, Alan, the rhodium conversation, that's when Guy and I were like, let's get him back. So in terms of like what you do for your portfolio, if the miners wind up selling off, whether it's ex-dividend or whether it's because the underlying metal's selling off, which ones do you buy in the dip? Like, what are the ones you want exposure to?
That's a very good question. I think if you look at a commodity suite, so you're thinking about which metals are going to be important for renewables, for green energy, then clearly, you know, copper comes up at the top of the pile. You may also be looking at nickel, you know, maybe cobalt, a range of different metals, and maybe not iron ore. I think we discussed last time, you know, iron ore is a very concentrated market. So I'd be looking for companies that have a growth or copper growth equivalent, as we call it. So things like, you know, Anglo-American, where you've also got the upside from, you know, improving diamond prices, which have clearly been impacted by consumer weakness over the last 18 months or so. So, you know, a company like that ticks quite a few boxes for us. But I think you're just looking at a range of different commodities rather than banking on one particular commodity.